Hello, welcome to the last part of this class 6, which is ETF versus index fund. Well, if we talk about return in both of these products will be equal to the return of in Nifty. So if you are, let's say, going to invest into one index fund, which is going to track the performance of Nifty, and then you are also going to invest into one ETF, which is going to track Nifty, then in that case return on both of the product will be almost equal depending on the slight difference between their cost. So ETF companies which are managing ETF, they will also charge you something, index fund will also charge you something, but in a very passive manner you will be able to invest into market. You will be able to invest into stock market, to be very precise. You will be able to invest passively into one of the index of that market. For example, in ETF, Nifty ETF, I have shown you that example as the underlying index as Nifty, and you are aware how Nifty is calculated, what Nifty represent, and all those stuff. So this is more like a operational and a closer chapter from the perspective of ETF and index fund. As I told you, return will be more or less similar. The slight difference in their return could come only because one is having slightly higher fund management charge than others, however, these days that difference has also gone significantly low. There was a time 5-6 years back when index fund used to be having high fund management charge, and ETF was having slightly lower than, not slightly, a big difference was there. But these days, now that when you are attending this class in April 2020 and onwards, let me tell you that there will be very less difference between the charges of both. However, there will be some differences. Let's understand that so that we have better clarity. The very first thing, index fund expense ratio still varies from 0.1% to 0.5%. However, ETF expense ratios goes as low as 0.05%. So even today, ETF is slightly cheaper than index fund for sure, if I take the industry standard. Then, as you know, index fund is a mutual fund. ETF is more like a stock. The way you buy and sell stocks, similarly you buy and sell ETF. So you don't need to open a trading demat account if you go and choose index fund to passively invest into one index. But let's say if you want to passively invest into that index through ETF, you have to open a demat and trading account. Then index fund is like mutual fund, where every time you want to buy, the allocation into your account will happen on the NAV, closer NAV, and every time when you are going to sell, again your own holding will be sold at the closer NAV. However, ETF is, as I told you, traded on exchange. So let's say you are buying Nifty ETF on NSE website, you can buy and sell during the market period, market hours. Then index fund will have no brokerage. As I told you, index fund will have slightly higher expense ratio than ETF, but in index fund you will have no brokerage. In ETF, there are so many discounted brokers who will not charge you ETF, but there could be a brokerage. The brokerage could be as high also. If you are not careful with your broker, stock broker, he has the liberty to give, I think, charge up to whatever the maximum which SEBI has given them the liberty or right to charge. So there could be a very high charge also in the ETF. You need to check your with broker, negotiate them hard, or go with the discounted broker. Or the best thing is, like, you always check all your charges before investing into any product. But yes, in index you do not have to be worried about the brokerage part. There will be no brokerage in the index fund. Then index fund, you do not have to worry about the impact cost also. So I have already explained you about the impact cost. Let's understand in this class what you do not have to worry about is basically, since you are not involved into buying and selling process of the actual product, which are like the constituents of Nifty in the same proportion. So it will be managed by the fund manager and the professional company. So you do not have to worry about the slippages which may happen when you try to buy and sell, because in index the units will be allocated to you at the closer NAV. However, in ETF, there will be buyer, seller, and you have to be very careful in terms of executing your ETF trade. You can end up giving some impact cost also, so this is another difference. Then in index fund, you can start with 500 rupees investment. You can go to 600, 700, 750, 1200 rupees, 1500 rupees, 5000, 10,000, any amount. Above 500 rupees, you can choose any amount, and accordingly, even in fraction of NAV, it will be even in the fraction of units as per the prices of NAV, your allocation will happen. However, ETF has to be bought in multiple. So let's say if one ETF is costing you 1000 rupees, then you can invest only in the multiple of 1000 rupees on that specific day. Then these are the differences between index fund and ETF. Tradability is another difference which you can see, because there might be a issue of liquidity in certain ETF. This is also you have to be careful about. Otherwise, when I say about the return part, you will hardly have any difference on the return side. Both of them are passive way of investing into stock market, and I can't tell you which is better, whether ETF or the index. But then what are the differences? The operational differences is something which I told you. I won't mind investing either into index fund or even into ETF, right? Or having a portfolio of both. So with this final lecture in class 6, as you are progressing further to learn more deeper into the stock market, you can still consider in the initial days, till the time you are not fully equipped with all the knowledge to directly invest into stock market, you can choose this also as an option. This was the whole agenda of bringing this chapter in the introductory classes, that some people might not be good at it. Some people might just want to invest into stock market and still don't want to go and research about companies. For them, index fund or ETF will do the needful. Right. So with this note, thank you very much. Let's go to this next class, which is class 7. And thank you for attending.